Justin, clearly different, reasons and circumstances here, but does this remind you of any time? Should we be worried that this is going to be the next financial crisis that's unfolding before our eyes?
I mean, it does it does remind me of, the chart action, there was a time there where it was like you were looking at the charts, and I remember looking, and there was one point where I was traveling, and I think I was like at a money show or something like that. Would go up to my room, and I didn't have anything, so it was not bothering me in terms of my account that things were going down. But I started looking at it, and it's like, wow, this is really ugly. Again, like what Scott was saying with Schwab, like it just, nothing could catch a bid. It was just, there were no buyers coming in. And every time the news was out, it was people coming out saying, hey, this is okay. We've got the liquidity, don't worry. And then another shoe would drop, and you'd find out, more stuff. So that the risks had gotten a little bit out of whack, that they had made too big of a bet on something. And again, in this case, it's that they made it on the treasuries, what's considered the risk-free. And that's true to a certain degree, but it's again that mark to market that is killing them, especially like in the case of SVB, when you've got people saying, hey, no, I want my money now. So a 10-year time frame does not help at all when people want their money now. So yeah, it does worry me. Now, do I think that this is going to be the destruction of the earth as we know it? No, because for as bad as the financial crisis was, we did come out of it. As bad as the dot-com bubble was, where a bunch of stocks went belly up, things that were going to be the greatest thing since sliced bread. We did come out of it. Am I gonna be in for a while? Probably not. It's okay for us to come out of it, and I'll be there when we do. But I'll just step to the side until there's evidence that things are back on track. And look, we could get a bounce and then another leg down. So there's all sorts of scenarios that can happen. But there's a lot of stuff that's happening right now that's got me scratching my head. I mean, Bitcoin is, BITO is, that just came on my radar as up, 13%. Yeah, this,
what should we do with this?
This is weird. So again, either I'm not smart enough, not brave enough, what have you. I'm just gonna wait. But yeah, it does concern me, because it just seems like more information has to come out here. And I know that things can get worse before they get better. Could we do a little go back in time? Could you go to 2008, and let's do September 29th.
You want the NASDAQ? You want the S&P? What do you want?
Let's look at the VIX. Let's look at the VIX.
Okay.
Yeah.
So we want the VIX in September of.
Yeah, September 29th, 2008.
Okay.
Because, Ken mentioned how, the VIX is really spiking up here. And, a lot of people will look at that and say, okay, the VIX, as the VIX goes up a lot, it's a potential bottoming signal, right? But what you also have to remember is that sometimes the VIX can be going up, and in, situations of this kind of like panic, it can go up even more. So let's go out another month, because this is where, the VIX just was down at really low levels, below 20. You go down you go out another month, and that 40 level that it crossed looks like, oh wow, that's nothing. The VIX got up so much more as things unfolded. Now, I'm not saying that that's going to happen this time, but just know that a spike in the VIX isn't necessarily like, okay, this is definitely the bottom. It can get worse, before it gets better. One other thing to kind of keep in mind with the VIX right now, this spike just got the VIX over 30, which I mean, it's high for us recently, but the VIX also has a potential calculation problem. John Nigerian was on the show a little while ago. He was talking about this. This is something that I've been talking about with, I've been trading emails with Anne Marie Band on this, a few months ago, that, with the zero days to expiration options, people have a different way of kind of, hedging and playing with this volatility side of things. And so John Nigerian was saying, just frankly, that he thought that the VIX calculation needed to be redone because it doesn't take in those zero
Interesting.
DTE options into its calculation. So he said, he was saying that he thought the calculation needed to be redone. So, I'm just saying that this might not be the best signal for, hey, we might be at a,
Such a
we
good
might be at a
point.
bottom because the VIX is spiking so much, because it can get worse
Yeah.
before it gets better.
And just a little bit more color on that. There's a huge percentage of options now, just to show the significance of this, that expire in a week or less.
Right.
Right.
Yeah. The game has changed. The game has changed. It used to be, there were a lot of quarterly options, and then, you had some that had the monthly options, then the weekly came out, and then the zero DTEs came out. And again, those zero DTEs are not part of the VIX calculation. And it's something that is getting more and more popular. So whenever they come up with these products, that it can just change the way things work, and that's what's potentially happened here for the VIX.
And so for those out there who this is the first time they've heard of zero DTE or 0 days till expiration, as you said, clearly very short time frame there to be making a directional bet, right?
Right.
Can you give us a little bit more information about what exactly those are and what it entails?
Yeah, I mean that's what it is. It's when you think of an option, the options already have that issue of you've got a timer, right? You've got a timer ticking away that is changing your that's changing the value of your position, very quickly as that time value decreases. So for zero DTE, there really isn't room for adjustment. You kind of, okay, here's where I think my goalposts are, and I'm either gonna win or I'm gonna lose. It's kind of an all or nothing, very binary. So it's not for everybody, but it is a product out there, and it is something that's gotten more popular, and it is a way that people will sometimes sometimes people will use that as a hedge for their positions, to get kind of a short-term hedge on their positions. There's a lot of different ways to use it, but again, that basic idea is, if it does what you expect it to, you'll win. But if it doesn't, you're going to lose, and you just don't have time for adjustment because the expiration is, right on
0
you.
days.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.